of you guys have a Capital One credit card? So quite a few of you, actually. So, to me, I remember maybe it was a decade or maybe it was even longer before, I always thought a credit card was just a credit card. And they were plastic and they were kind of interchangeable. This is what reporters are like. We never really understand reality. And then I was exposed to the fact that I think at the time, Capital One was said to have more data than any other entity in the world except for AT&T. I think they told me at the time it had several hundred pages or something of data on every human being in the United States. And this is how it went from basically, Nigel, tell me if I'm wrong, a bunch of PhDs and a large bunch in Virginia to be a major company. And it was able to find a place in a market that was presumably an impregnable place. It was dominated by all the large banks. So I began this discussion with Nigel. We just saw each other for a second. With the notion that how much does that data, how much did it matter? How much does it matter really now? And I think he's going to argue that the data that it had there is no longer a differentiating factor in the same ways, but it is in other places. So why don't you start about talking about how data was useful and how that has changed for you in financial services and where you're now looking at data and where it might be useful. And then we're going to go through this panel.
Very good. Good morning, everybody. Tom, thank you for that. So I was there right at the beginning in the formation of Capital One. And Capital One came out of Signet Bank in Richmond, Virginia. And the core idea, and Neil was there too at that time, but the core idea was that the credit card business is not really the traditional lending business. It's not really banking at all. What it really is the leveraging of information in order to be able to put the right product in the right customer's hands at the right time. And the way you did that was in 2 or 3 ways. One was amassing huge amounts of data at the customer level, and then using experimental design, testing different product and market combinations in order to optimize value to the consumer and net present value to the entity. And mechanizing that on a giant scale where we did thousands and thousands of tests. Now this is before Google and Facebook and the Alibabas of this world have really taken this to another level. But it was we found it to be incredibly powerful and much, much more efficient and effective than more traditional mechanisms of doing a focus group and trying to define a segment. So competitive advantage was data, but much more not what data you have per se, but we can come back to that, but much more how you leverage data and organized it, curated it, and then moved it to execution within an organization.
So what year was this when you created it?
We started Capital One in 1994, so we just celebrated our 20th year of going IPO.
Okay, now, it hasn't been all that long. How has data changed in terms of what you're searching for now? How has that become less or more valuable? What you?
Yeah, well, so look, there's been an explosion of more data. So in our time, there were some lists that you could buy, and there was credit bureau data and other bits and pieces. Now we have social data. I'm sure Neil can talk a lot more about that than I can. There's geo data. Where are you and what are you doing when you're there? There is information from the other side of your balance sheet. What is your income and how much money do you have, rather than just what's been the 300 data points that exist in a credit bureau. And there's information that you're willing to give to a bank or to an entity that can be very powerful for splitting credit risk and or helping with marketing. One great example is when you make an application for a credit card and you fill it in by hand, do you do it in lowercase or do you do it in capital letters? That is a powerful predictor of certain things.
Really?
Yeah.
Like what?
Like credit risk.
Okay, because we want you to have one valuable piece of information to leave this with. Should we do it in caps or should we do it in
So don't write in capital letters. Apparently, I've also been told that actually what color ink you use can also be predicted. But there's an explosion, and then there's the Internet of Things data. Now, so the question is, in this explosion of data, it's much easier and much more simple now to store the data and curate the data. 20 years ago, Capital One had the largest Oracle relational database in the world. And we were pushing the envelope, and we were at the tip of that spear. Now it costs virtually nothing in the cloud to store the data. Extracting the data from the cloud costs nothing. And there's a whole series of different mechanisms by which you can leverage that data and the tools that you use. 20 years ago, we were doing basic, SPSS and SAS-based computer software, and a lot of it was done by hand. Now we have machine learning, we have artificial intelligence. Skynet has become sentient now. if you remember Terminator 1 and all those stories. So the world is really different. But the leverage, Tom, and this was we said this 20 years ago, is not in what data you've got per se, it's how you use the data.
So where do you, and then we'll move on to these two other panelists, where do you see the opportunities of, you obviously were inspired to create Capital One in 1994. Today, where do you see the opportunities of leveraging this amount of data? And by the way, as in the last panel, I would like people to raise their hands if they have questions while these people speak. And I want the panelists to weigh in too if they'd like. But
one comment I just wanted to add to Nigel's answer is, so what has changed is that touchpoint with the customer today collects so much more data about the context. You guys don't think about it, but you all are carrying a mobile phone. That mobile phone not only has your geolocation, it actually measures all sorts of other things that you may or may not know about. It's got an accelerometer, it's got a gyroscope, it can measure temperature, it can turn on the phone on its own, the mic on its own and sort of figure out the ambient sound and figure out where you are from that. So all of that is very, very related to the Internet of Things. People think the Internet of Things is coming into the future. I think it's here already with mobile phones and the fact that we all choose to carry them and use them and turn them on.
So, okay, so let's just pause here. It's a little creepy, the thing in your pocket knows you really well. Where do you, and we'll go through the two, but where do you see the opportunities then coming from data?
Well, certainly in financial services, and since leaving Capital One 10 years ago, we've been building out a venture capital firm that focuses on leveraging data and mobile strategies, Usama, in the new generation of fintechs that exist out there. And the banks being very legacy-oriented, very focused on dealing with a very difficult regulatory environment, and the fact, I think this is back to very crucially, finding it increasingly difficult to hire the talent that's required to take this stream of data that Usama mentioned and turn it into something valuable. Big difference between data and information here.
So 3 areas that you see value in data that you can actually help people.
Oh, I think the ability, if I talk to my children, the idea of walking into a bank branch, for instance, and originating a loan of some kind is an anathema to them. They do it all mobile, all online, all done with net promoter scores at 70 and 80, and all done very seamlessly. So companies like LendUp, companies like Prosper, companies like Green Sky, companies that we've invested in that are really focused on that.
On the credit edge. Facebook is always both ubiquitous and a mystery to me. Maybe because every day the feed that you get seems to be so random, it's like food and children or something like that. And the idea that it monetizes this is always kind of, you see obviously ways that it monetizes. We've started to see some advertisements, but you don't see all the subtle ways. And you certainly don't see, or I don't see, how it's moving into finance. So if you could just talk about how you're using data to move into finance and become a significant participant in that area, and where you would like to be that we haven't seen yet.
Well, we work with financial services companies, banks, credit cards, insurance companies around the world, and the main way that we're working with them is on the change in the media strategy. So what I learned at my time at Capital One was leveraging this information to really take advantage of the personalization of the product and the offer. And that was something that was done very smartly by use of differential data, and it was mainly done at the acquisition stage and through lifecycle management. We've invested a lot of time and energy in capitalizing on this move to mobile first in this transformation because the consumer's already pivoted. The consumer's already there, and the banks and the insurance companies and the credit card companies are in catch-up mode with the consumer behavior. So the opportunity really now is, if I think about how Capital One was 20 years ago, and we wanted to put direct mail in people's hands so that they had the best offer every single day, now we can take advantage of that on mobile in a much more efficient, scalable, and profitable way for the industry. So we're absolutely in partnership with them.
So if you had a fantasy of Facebook as a ubiquitous financial entity, a financial product, in 3 years, what would our experience with Facebook, if everything worked out exactly the way you would love it today, what would it look like in 3 years?
I think you would get a piece of financial advice that helps you improve your life outcomes.
So you turn on Facebook, yeah.
You turn on Facebook or Instagram and you go into your feed, you get a piece of valuable advice from one of your existing relationships in the banking system that helps you improve your financial outcomes. And then if you have any queries or questions about it, you're using a messenger platform, and you're doing this in an automated and seamless way where you're getting the answer instantaneously and a high quality answer instead of actually waiting days, weeks, hours. It's minutes.
Yeah, Tom, two points, and building on that, Neil. I think absolutely, this personalization theme is absolutely right. It's so good for the consumer because you're offering me things that I care about, and it's so good for the economics of business because the cost of origination falls dramatically. But one thing is, in the old direct mail business, it would take you weeks or sometimes months to read response rates. And we'd read the early election returns and confidence intervals and all that stuff. In a mobile-first world, you can read the results in minutes. So you can test an idea against a segment and read the results of it in very rapid fire. So it promotes geometric learning in an environment.
So you turn on Facebook. Oh, you have a second point.
Yeah, my second point is that there are a number of entities now in the FinServe world that are starting to recognize that consumers don't really understand their own personal finances and don't really understand the opportunities that are put in front of them. I mean, perfect example is what poor old Wells Fargo have just gone through, and how people were perhaps sold products that they didn't want or didn't understand. But consumers don't really understand their own financial services, and the level of financial literacy in America and in the UK is really low. So aggregators and or navigators that can say, look, Tom, you're leaving too much money lying around in your bank branch. If you take it out of there and you put it into this account, you'll get an extra 50 basis points, and that's worth this to you. Press this button, and we'll take care of it for you.
So the picture is you turn on your Facebook on your phone, you have messages from your friends and stuff like that, and interspersed within these conversations that you're having, you also have messages, or you can correspond with all the people you have these financial relationships, and you can consummate transactions with them as well. So you never have to leave the Facebook ecosystem as you're doing all these other things.
Well, you never leave your mobile phone. You never leave mobile. So if you go into that banking relationship, if I go into my Capital One app or my Wells Fargo app, that is entirely fine. We want really high quality customer experiences to occur there as well. So the way that I simplify this is that if you think about the bank's app being the future of the bank, then the social network becomes the banker or the insurance agent, the advisor. That trusted advisor space has moved from a personal conversation into a machine learning-based conversation where you're automating that, and you're doing this at a massive scale. Because a credit card means something very different for me being a 20-year-old than a 45-year-old. I use it in a completely different way. The mechanics of the business model and how you transact is exactly the same, but what I'm using it for and how important it is in my life is very different at the individual level. And that's something that I feel like from a technology perspective and the use of all this data that we're just starting to see the beginning of what's possible.
So what does this sound like? Fayyad was previously, Mr. Fayyad was previously the Chief Data Officer at Barclays and is now, oh, there is a question. In fact, we do have time to break in with it. You have 31 minutes left, so we'll get to you. I really do encourage people to ask when the issue is hot. And so it's not saved to the end where it's really tired. And so you,
yes.
Or yes.
So on WeChat, there's a lot of, you stay within the Messenger app, and you can do everything from financial services to, we are told, schedule your doctor's appointments and all of that. And there's talk of Facebook moving there. But do you think that non-Chinese audiences will want to spend their entire life within the Messenger app?
No. We do see that the majority of time spent on mobile is within a few apps, Facebook and Instagram being two of them. But I think there's actually differential value in some of these apps. So we're going to see a race for really high quality customer experiences. On the way that we're developing out, we want to partner with the ecosystem because there's so much talent and there's so much intellectual capital already built into the insurance industry and the banking industry. It'd be a shame to not take advantage of that and to really put the best thing in front of the consumer. From Mark's perspective, we think every piece of content that comes into the news feed or in Instagram should be as relevant as something from your friends and family. So that's the aspiration that we have for every piece of content, including financial services companies.
Well, I just have to say, I hope it's far more relevant than all the information I get from friends and family. But, Mr. I have two questions for you, Usama. The first is, how does this sound to a chief data officer of a bank when you're thinking of where you have to be in 2017? The other thing is, and this is a holdover for the question this morning, every great idea seemed to come from a person who worked for a bank, who left a bank to have more freedom to create something. So now we have a person who's just left a bank and he's moved to Silicon Valley, and I'm sure he has terrific ideas. And as we learned in that first panel, if you don't get in early, it's too late. So I would like to know maybe your big ideas when you left, where you think you can really add value as a Silicon Valley creator of a fintech product, but also given what these two have just said about where banks stand, what does that leave for them? What position does that put them in?
So I'll first start with the banks, then we'll go to the other comments. So for banks, I came into banks from Silicon Valley and Seattle. So I came from the technology world to help a bank do a major transformation around data. My big wake-up call entering financial services is realizing that there's a huge lack of automation, right? So a lot of things that happen in a bank, whether you think about it or not, is manual, right? They emerged over the last 100, 200 years, very heavily dependent on a human-to-human interaction, on a human looking over stuff, on a human deciding stuff, assessing risk, working in the back office. So today, this morning I was listening to a story about Wells Fargo, and they mentioned that Wells Fargo has 260,000 employees. 260,000 employees. Barclays has 130,000 employees. Similar numbers for a lot of the big banks. Now, I asked the question, do you need that many people in a bank? And what are they doing? And one of my big lessons learned is they're doing a lot of stuff that machines should be doing, and machines could be doing a lot better, especially in the back office. Now, back office meaning sort of risk, finance, treasury, all the functions that you don't think about that happen in a bank and how to automate them. Then there's the front office stuff, which is how the new generation is going to access financial services, how financial services make themselves more relevant to the new generation. And this is, I think, where social networks come in. And this is where I think these predictions around people spending all their time in a certain environment. I mean, I moved from the scientific world where I was at NASA JPL into the business world when I moved to Microsoft back in 1995. And that was my exposure to a company that thought you'll spend all your time inside the Microsoft world, right? Zoom forward, where is Microsoft on the mobile? Probably not there, hopefully coming back. Will the new generation spend all its time or choose to spend all its time on chat? There's powerful evidence from China, and I don't think the Chinese consumer is any different than the American consumer, honestly. It's just a question of who gets exposed to what, when, and what's convenient. If you look at WeChat, it's not just a chat app. It's got a whole bunch of applications embedded in it that let you do stuff, from paying your buddy to hailing a taxi to renting a place, all sorts of stuff. It's a whole environment by itself. The new generation does spend a lot of its time in chat, and chat could be one of the places where a lot of that advice becomes relevant. And that advice doesn't necessarily have to come from an uninformed family member or a friend who's hallucinating. It could also come from...
It's my Facebook feed.
It could also come, and I know I may not be popular for saying this, it may also come from highly knowledgeable, highly expert-oriented applications. Nowadays, they're called chatbots, that are intelligent, that can have a conversation, that essentially can help you tap into that whole world out there. So think about it. You're in your chat. Today, for example, I have chats going on with my family. I have chats going on with my friends, groups, right? Whether it's on Telegram or on WhatsApp or on the Facebook chat. And I have many, many chats going on with a lot of startups that I'm working with right now, different teams, on different platforms, right? Including Slack. If you're a developer, you know what that is. All those different chat things are happening all the time. Professional life, personal life, financial life, and that's where an intelligent bot can know when to do it and do it right.
So
do it without
interruption. Off because I think we understand the point here. But where does this leave a bank? Where does this leave Barclays in the process? I mean, it's a great institution. Where does this leave all the major banks? As you mentioned, they spend a fortune every year in technology, but where in this ecosystem do they have a place? And if they do have a place, is it not with 130,000 or 220,000 employees, but it is with 12 feeding into Facebook's?
So I think my personal opinion is banks have an advantage over all other companies today in one area. And that area is identity. So think about it. Facebook doesn't have branches where you can walk in and verify you are you and show an ID and keep track of it. And in fact, through many surveys that are run by the industry, if you ask about trust, I know banks get a bad rap and everybody talks about the bad banks, but think about it. And the surveys, by the way, are showing it. If you ask consumers, who do you trust the most? Your bank, your telco, social network.
Okay, I don't mean to keep pushing you ahead, but let's assume that trust is a real advantage. Where does that, is that a 20,000 person operation or a 10,000 or what is the shape that is, I mean, we've asked Facebook 3 years from now, what do they look like? What do these guys look like?
So for banks, the new world does not require too many people, but it requires a lot of know-how in technology, in big data, in understanding how to leverage that data. That same technology is going to enable banks to also dramatically shrink their back offices. You don't need a lot of these hands and fat fingers and so forth dealing with transactions. A lot of them can be done by machines. So I think the future of banking is a lot slimmer, a lot more efficient, and if they get it right, a lot more relevant if they figure out how to leverage the fact that they're trusted on the identity front and on the trust of the consumer, and that they understand the financial services world much more than a technology company could ever understand it, and therefore could leverage that advantage. Now, it doesn't take long. Technology companies are also very smart.
So I want to go back to, I mean, I want your ideas of starting a business, but this seems like a very thin reed to rest on. Do you really think that fintech people cannot overcome this idea of trust? And I go to you two, because you must spend a lot of time thinking about trust, both of you, in the business that you do.
But trust is a complicated personality. If you look at the net promoter scores of the banks versus the fintechs are in the 70s and 80s, the banks are in the 20s. It's a huge experience differential. If you ask millennials, what would they prefer to do, go to the dentist or go and meet their bank manager, they prefer to go to the dentist. So there's really, the particularly young people who are very mobile-centric are really not very keen on their bank. Now that's talking about how their willingness to engage with the bank, not necessarily trust. If you're in the lending business, where I spent most of my time, money is a commodity, and I don't really care who's going to give me the money. So trust, as defined as will you look after my assets, is not as relevant. Let me just touch on the Cambrian change that's about to occur in banking. Do you know how many bank branches there are in America? There are 90,000. 90,000 bank branches. How do banks make money in branches? They make money largely because people leave money lying around. Where are the bank branches where people leave money lying around? Upscale urban. Downscale urban and rural, there's much less money, and the bank branches are unprofitable if you allocate the cost to them. They are going to go away. The political ramifications of that are enormous. A consulting firm I know very well believe that America today is 25% overbranched, and in 5 years will be 50% overbranched. Let me continue with the theme just for a sec. There are 1.1 million real estate agents in America. They are brokers, they're intermediaries. The tools that are now being developed in a mobile-first world are going to make a huge dent in that. There are 500,000 people who are offering various brokerage services in America. These jobs, in a world of mobile and AI and the kind of opportunities that Neil's talking about, are going to go away fast. Who wins? The banks that get that the world is changing. And I, as a bank strategy of being all things to all people, everywhere, all the time through my branches, where I want to do the whole value-added chain, is an impossible strategy to pull off.
So I thought where you were going to go with this, actually, is that a lot of your use of data was to determine trust. I mean, and that's what Capital One did in terms of being very good at allocating who should have credit and what they should pay for credit and who was a good customer.
I don't think we did trust. I think we were able to tailor remarkably well product and customer together in a way that they were very incented and seamlessly said, this product really fits my needs, and I'm going to go for that.
But isn't the lending stuff that you have discussed, the idea of using data to figure out who should be trusted with the loan and who should not be trusted?
Credit worthiness is what you're talking about. Yes, absolutely. Capital One was, I think, and probably still is, amazing at that. And that's, I think, why the company has grown so well over these years.
So when we look at the value of unlocking the value of big data, the question is, does it achieve that trust? And if it does achieve that trust, where does the bank fit? I mean, if you can do it in the cloud for the fraction of the cost that you were discussing, is there still a role for, what do you think? You left the bank. What do you think? I guess maybe you were thinking no.
No. Look, the bank, we can think about the future and where things are going, but look at the world today, right? Where are people keeping their money? Who do they trust with that money? And who can navigate the increasingly complex regulatory environment that actually, if you're going to be a real player in the financial services and do payments and all of that, you're going to have to think hard about that and how to tackle it. And that is a cost driver, and that is, in some ways, a competitive advantage for the banks who know how to deal with it. I do agree, though. I don't think banks will go away. I think it is the banks that are smart, who get the future, who figure out how to become relevant to the new generation, and who figure out how to automate a lot of their back end. Either that, or they get displaced by the...
And crucially, the ones that figure out how to partner with the Facebooks of this world, with these new generation of, I like the way you put it, the people who are customer originating platforms, and then the ones that are using tools to originate the back office. The smart banks are realizing, and take Jamie Dimon in JP Morgan's relationship with On Deck Capital, a small business lender, all online. Take Green Sky and their relationship with Fifth Third. These are banks that are saying, look, we can't be all things to all people. We just don't have that capability. We're going to partner with others, and we're going to start to see the value-added chain in banking start to break apart.
There's a question, I was about to say that I listened to George Shultz, a former Treasury Secretary and Defense Secretary, did a lot of things, and he said the way to get people to talk is to stop talking. So I'm glad there's one question. If there's another question, I would like it out in the audience too. I'm just very eager to hear from you guys to ask these panels things.
So it sounds like a lot of the data we're talking about is really optimized on like the customer acquisition side or optimizing existing financial products. I'm curious if you think, with all this proliferation of new data sets, there's actually be new financial products. So as opposed to, lending clubs selling you really the same type of loan a bank would sell you, but from a different source of capital, maybe an easier acquisition process, is there going to be like a new loan type created, a new insurance product created based off all this data?
Well, I think you can definitely look at a company like Tala that is doing microfinance, and when you start thinking about mobile being the primary platform for how you originate, how you build your brand equity, how you manage the customer lifecycle, you can actually go a lot deeper into the funnel. So it might be smaller step changes in credit risk decisions where you're extending line in different ways than you're doing today if you're a credit card company, because you're making decisions in real time, and you can do that in smaller increments at a profitable level, which you couldn't do 10 years ago. So that's an opportunity, and that will change how financial services feel to people.
I can give another example, which I always resonate with. In the emerging world of Internet of Things, I should be able to buy auto insurance by the day rather than by the year. And it should be indexed to how I'm using my car, which, as Usama mentioned, my mobile phone knows where I start and knows where I end. And incidentally, the capturing of that data can actually be very predictive in whether or not I'm going to crash my car. People who accelerate really hard and brake really hard, statistically, are more likely to crash their car. That data is captured, and if you look at the front-end app that people like Progressive are using, I can't remember the name of the app now, but they're capturing that data now, and they start to factor it into their actuarial analysis.
Yeah, and it's already, by the way, it's a great example of the collaboration. A lot of, some of the big insurance companies are partnering with the small startups who are providing that technology. And today, they are experimenting in certain markets in the US with pay by the cup for insurance. But another one that's been here for a while, by the way, and has been very successful is the Discovery Insurance that came out of South Africa and now is in the UK and other parts of Europe, where basically they tied your insurance costs to how often you go to the gym and to what habits you have in terms of the more you share, in terms of what kind of foods you buy, how often you go to the gym, all that kind of stuff, they can reflect it back to charge you less or more for insurance. So a lot of these things are happening already, and I think this is an area where financial services in general, including insurance, are some of the, could be some of the innovators.
It is interesting. Insurance has been one of the slowest. There is a company in San Francisco that you can insure based on your, but it's been a very slow area to adopt. The first round was all credit related, but insurance, and it comes up as one of the more interesting ideas. We all need more incentive to go to the gym, but it's funny that it is. Why do you think it's lagged? Why do you think it's taken longer to come up with insurance products than it is these other?
I would just caution, don't interpret, small in the market with lag. The exponential functions, right? These things that take off all of a sudden, they look very, very, very boring in the first few years. They look like nothing is happening, birds chirping. And suddenly they take off, and by the time you notice them taking off, it's too late. So a lot of these phenomenon are exponential. I mean, that was the start of Facebook. It's, it's a well-known phenomenon. So I would argue it's actually happening. It's just happening at a small scale, which is natural, and it takes a while, and then when it takes off, it's
this phenomenon of slow, pedestrian, linear change followed by geometric movement, I think, is a good, powerful one. Last week in Las Vegas, there was the first InsurTech conference. And
last week in Las Vegas, insurance just sounds so...
It's a place where everybody wants to go. But InsurTech, and the idea was that how are these technology phenomenon that we've talked about going to join up with insurance? This was the inaugural one. We were investors in this platform. We had 1,500 people there. Wow. People were fighting to get there. Next year, it's going to be, I think, double or triple that. Because the insurance companies are slow to realize, Tom, but they're realizing that their current distribution mechanism, which is by and large either TV or through various brokerage channels, is too expensive and not targeted. And consumers want to buy insurance in smaller doses, we touched on that, and they want to do it in a mobile world. They don't have the technology, they don't have the skill set to be able to do that per se. So they are beginning to do that. That's one reason why it's slow, because the incumbents are very old world. The second reason is actually the regulatory environment. Insurance companies are regulated state by state. You have to go and deal with 50-odd different regulatory.
And they are odd.
I never said that.
If you've ever thought of an industry that is dependent on data, it is insurance. So as long as I've been back in America from Asia 5 years, I've called every year to find examples of insurance startups. And it's interesting you have 1,500 now because the number was just quite small. And everyone would, but it would be interesting if that was the big winner ultimately, that it was, the area that started late. Everyone thinks you have to be so ahead of the curve on something, but actually you just have to get it right. There was another question out here. There are two. So yes, could you please?
Thank you. A little bit of cold water, maybe some more cold water, just to kind of keep this measured. In response, it's a comment/question. I'll try to be brief. Nigel mentioned usage-based insurance, so pay for what you use, and it's been happening for 10 years. Really, really slow adoption. The estimates I've seen is that it's going to be no more than 10% of global automotive insurance market, which is big, no doubt. But
could you identify who you are, because you seem to know a lot about what you're talking about?
Yeah, my name is Ian White. I'm a ex-startup guy researching a book about actually economics of data across all industries.
Great, yeah, terrific.
So that's one comment. This usage-based insurance may not actually skyrocket the way we think it will. In the notion of insurance, you have this notion of public policy. So what's good for the public can be bad for profits. So it's silly that I can only buy health insurance based on where I arbitrarily happen to reside, meaning a postal code or an age bracket. Same thing for earthquake insurance and so on and so on. The notion of correlation and causation, big data meaning better decisions. Not necessarily. A lot of spurious decisions and calculations can get made based on things. And so I just like some comments or feedback based on the idea of this is not a holy grail, right? There are lots of bad decisions that get made, and sometimes they aren't borne out until much, much later. So I was wondering if the panel can address this across a variety of ways, not just property and casualty, but other areas of insurance or macroeconomics as well.
Yeah. So, look, 25 years ago, people weren't sure if credit bureaus were going to take off and whether or not a FICO score would actually be predictive of credit risk. I worked with banks 25 years ago where they said, look, I've got Joe, and he's been in the business of 30 years of looking at credit card applications. He knows what he's doing. He can beat your machine any day of the week. Look how things have changed. But the reason why the change is because you've actually collected data. One of the things about credit risk, which is different to marketing, we talked about marketing earlier, is that I've got to look at customers that I've booked, and I've got to see which ones didn't pay me back. And then I've got to go back and reverse engineer what data is correlated with, caused by, that issue of risk. And then I can start to unravel and say, this particular data set is predictive of risk, and then I can start to deploy it. That's what we're going to see in insurance, where the actuaries of this world are starting to look at these new data sets and say, look, this is how we price to risk, and we understand how that works. That will take many years, because the gestation period take something like life insurance, Spectre. You go to the gym, and therefore you should get lower priced life insurance. Well, how much? How do you know? It takes a long time for that information to flow through the system, unless you just want to actually take some swags at it.
It's not clear that, I mean, the hypothesis here is that if you become more price efficient based on information, it could lead to a worse state for society. I'm not sure there's very strong evidence of that. I think if you figure out how to do the proper allocation and get the right segments to pay the right costs, generally it's a good thing. And generally, it will create the right incentives for people to do the right things that, in general, will be good for everyone.
Of course, you raised a very important point, which is healthcare insurance, which really does lend itself to tremendous analysis, but yet there are a lot of rules that would preclude that being used effectively. There was actually there's Oscar. There's actually very few people in the health insurance space and fintech, and I assume it's a regulatory barrier too. But there was another question in the yes, there's a person eager to could you?
Thanks. So I guess the platform companies, Facebook and Google, et cetera, I think probably Google more so, have sort of gone on the record saying that they don't necessarily want to be in financial services because of, regulation, amongst other things, right? And so when you talk about some of the just-in-time personalization you will be offering, what has changed in that relative to your view of regulation and how you want to partake in the fin services ecosystem? And conversely, for the banks, right? The banks have had more data, and arguably amongst them combined, more data than Facebook does. Even while Mark Zuckerberg was, in his dorm room. So historically, they haven't been able to monetize that data. And, what is the indication and an actual case in point that they have successfully done so?
Who wants to take that?
Well, there's an aspect of it where we have a saying inside of Facebook, the journey is just 1% complete. And so when we are looking at this moment in time, I feel like sometimes we expect that we know all the answers, but we're really in this grand phase of experimentation and leveraging new tools that have never been available to us in the history of humankind. And there's an expectation that we're going to figure this out in a year or 2 years. And the reality is we're going to do this over the course of a longer time period. But it's an explosion in data. So this data that we have now to improve creativity, to really personalize and do different things and communicate the value propositions of financial services products in new and interesting ways is really a notion that is just starting to come into the forefront. And then what Nigel was saying about the banking system and the number of branches, and what Usama was saying as well about the opportunity for automation and actually driving efficiency and scale through the mobile platform and through these messaging platforms is something that we're not even 1% done, we're 0.1% done with that. So I feel like we're in this is the most exciting time to be in financial services, because this mobile platform and the capability of the cameras, the real time, the messaging platforms, all of these things are starting to come together in a way that is really focused on the consumer, and the banks and the insurance companies that are focused on the consumer first, prioritizing their time, prioritizing their needs and their financial lives, are going to be the ones that actually attract the consumer base over time.
Let me bounce in on that. I think cold water, good idea. I'm going to follow up on that question. I want a great idea that didn't work, that you guys were involved in. I mean, because everyone says you got to focus on the consumer. Who says we shouldn't focus on the consumer? Who says we should come up with the irrelevant ideas? Nobody goes into a business thinking they're pursuing a bad idea, yet a lot of stuff doesn't work. So can you be candid enough, either any of you, to actually disclose an idea you thought was terrific, should have been terrific, just didn't happen?
Well, I'll give an example. So we've got a product in our advertising stack called Lead Ads, and what we're doing is we're pre-filling PII. So name, email address, phone numbers, we can push that into any advertiser's system. So we trialed that back in 2013, and the first test was an abysmal failure. And it was really just knowing that the notion of taking friction out of the user experience, and if you have data, to leverage it and take that out of the customer's hands and basically not make them type their names and addresses over and over and over again on a mobile phone is something that we just had to stick through and we had to iterate. So in Facebook, one of the things that I'm really excited about is the fact that we actually don't really think about failure. We think about learning. It's a learning organization, and that you have to fail in order to
That's a good thing. So let me ask you two, what learning experience have you had?
So, look, I mean, banks and insurance companies, and the history is rife with bad ideas. I mean, in the UK, I'll tell you, like one of the biggest things is, banks, what was it, 5, 6, 8 years ago, decided to sell insurance, against sort of, losing your job, losing whatever, massively to the consumers. And to this date, they are paying billions, right? Unpredictable billions in fines every year, right? If you live in the UK, if you live in London, you will get your PII call. You'll get a call that says, have you collected your $2,000 or $3,000 from your bank, right? And if not, press 1. So these things are bad ideas, right? Banks experimented. It looked like a good idea at the time. Payroll loans, some of the banks in the UK.
Okay, so did you have an idea too?
Yeah, I'm going to say that notwithstanding all the hyperbole that you've heard from me anyway, around how mobile and data and how everything's changing, there are some things that you do need a human being in. I'll give you one example. It's a company called Borrow, which is B-O-R-R-O, and their idea was that people who find themselves in a pickle economically, often small business owners, have physical assets that they could actually park with you, and Borrow would loan money against those physical assets. Think a watch, a piece of art, and a wine collection. And I, in my naivete, thought, you know what, I think this will really lend itself to direct distribution. We'll be able to find those people online, and we'll be able to put really targeted offers in front of them, and you know what, we'll figure out logistically how to make this work. The truth of it is, this is a business that has to be done face-to-face, and Borrow will end up using the auction houses and high net worth distribution systems. That's one example. I think there are many examples of where a human being is necessary. We have a company called Red Ventures that's based in Charlotte, and they have fabulously trained, incredible salespeople in call centers that have 22-minute talk times or something, and they're taking people through complex things like changing your satellite TV provider. That's very hard to do that in a Facebook world, where there's complexity of hardware and software and subscriptions and deals, and do you want this or do you want that?
I love the idea that the pawn shop is really the thing that resists all financial intervention in the end, right? I think the oldest bank or the oldest financial institution in the Western Hemisphere, in the Americas, is the Monte de Piedad in Mexico City. It's right on the Presidential Square, and it was opened as a pawn shop, and it's several times gotten and given up its banking license. It dates back to the 16th or 15th century, and it obviously has a great future based on what you. So I want everyone to leave this panel with one terrific idea for the future. Do you have we have 1 minute left. Okay, what's your question? While she's saying that, the one great idea that we have so far is don't use capital letters in your credit card application. But I want a great idea from each of you before we end. But let's take your question.
Each of you could address payments. So the sort of issue with millennials is they don't really have any money, but they like to buy goods and services. Does the payment ecosystem have to change dramatically to satisfy that customer?
I'll give you the highest level change that has to take place. Today, payments, as done today on the normal rails we're used to, credit cards and the debit card, are too expensive. And there is no justification for that. In fact, historically, this is why, in my opinion, banks didn't innovate too much prior to the question, is they had the margins. Now the margins are shrinking, the pressures are there, and the technology makes it absolutely possible to do micropayments with almost zero cost. And we're seeing this happening. We're seeing this happening where banks, large banks like JP Morgan, are going to very large retailers like Walmart and saying, will provide the services with no fees for the interchange fees. And the reason that's attractive to Walmart, but it's extremely attractive to somebody like a JP Morgan because it actually gives them the real business, which is the lending opportunity if you use a JP Morgan credit card. So, or Chase credit card. So I think that's the biggest driver for change. Now, the applications that use payments, that's a huge space, and that's unpredictable. But I do think the one constant that will happen is we'll see a huge shrinkage in the cost of making a payment.
So we're out of time, but I want a great idea from each of these people for you to have. So, Nigel, do you have a good idea for the? Do you have a good idea for the? Yeah. Should we start with?
Go ahead.
The great idea is that the future of retail financial services is going to be dominated by entities that build fabulous brand up front and have large customer bases. Think Credit Karma, who have said, look, we're going to give you free credit reports and we're going to help you navigate this very difficult thing called a credit bureau. And we are going to start offering other services and products to you, and they will partner with the banks to provide those services. These kinds of navigational platforms, these kind of stewards for consumers will end up being the front end for a lot of retail banking.
I go back to one of the things that Nigel said about financial literacy, and the opportunity really is untapped, and there's no one in a better position to actually have a trusted space, that they have a platform and a voice that's respected by people. So I think a lot of focus on financial literacy and taking some big bets and being more mission focused. That's another thing about Facebook, is that we really do want to make the world more open and connected, give people the power to share, and that mission orientation within the company creates a lot of good outcomes. And that's something that I feel like is an opportunity and a focus area.
So this is perfect. We end with a man who's just given up a bank to move to Silicon Valley. He's been there 3 weeks, and we assume he's working on the next unicorn. So what's your...
Okay, so rule number one is I'll never share with you my biggest idea, but I'll give you the biggest idea, at least in financial services and banking, in my humble opinion, which is customer intimacy. So if you go back 100 to maybe 50 years ago, banks had a very, very intimate relationship with their customers. The branch manager and the staff knew pretty much every customer, who was going to get a loan, who was going through a divorce, who wanted to buy land, who wanted to buy a horse, whatever. They lost that at scale, and they missed out on the bandwagon where technology companies knew how to get that customer intimacy through technology. I think the big idea is big data and data science is going to bring back that possibility of a customer intimacy to banking and to financial services, which will reduce a lot of the back office costs and a lot of the front office costs for delivery.
So I guess we end with the idea that machines will allow us to be intimate on a human basis again, which is kind of an interesting spot. Thank you very much for the questions in particular, but the panelists have been great.